Hey everyone, and welcome to the channel. Today we're diving into a topic crucial for any aspiring entrepreneur funding your dream business. Let's face it, turning that brilliant idea into a reality often hits a brick wall: financing. Studies show that a whopping 72% of startups cite funding as their biggest hurdle. You've got the passion, the plan, but securing the cash to get started can feel impossible. But fear not, fellow go-getters. There's a powerful tool out there many entrepreneurs overlook: government loans for startups. That's right, Uncle Sam might just be your secret weapon for launching your dream business. Stick around, because in this video we'll crack open the world of government loans and show you how they can fuel your entrepreneurial fire. Now, before you roll your eyes and think government loans, forget about it, hear me out. While securing funding can feel like scaling Mount Everest, there's a hidden path: government loans specifically designed to help startups like yours get off the ground. These loans offer attractive features like lower interest rates and flexible repayment plans, making them a viable option to consider alongside traditional bank loans or venture capitalists. So if you're ready to explore how government loans can turn your startup dream into a reality, then keep on watching. Alright, let's break down exactly what government-backed loans for businesses are. Imagine you have a fantastic idea for a new product or service, but launching it requires some initial cash. A traditional bank loan might seem like the way to go, but qualifying can be tough, especially for a new business. This is where government steps in. Think of them as a kind of lending wingman. The government doesn't directly hand out the cash, but they partner with banks and other lenders. These partners offer special loans with the government's guarantee. That means if you can't repay the loan, the government steps in to cover the bank's losses. This makes lenders more comfortable offering financing to startups, and you get access to funds with better terms than a regular business loan. It's a win-win. So government-backed loans are essentially a helping hand from Uncle Sam to get your entrepreneurial journey off to a strong start. Now listen up, because here's why government-backed loans are such a game changer for startup founders. First off, compared to traditional bank loans, they typically come with significantly lower interest rates. This translates to serious savings on what you pay back over time, freeing up more cash to invest in your business. Second, government loans often boast flexible repayment terms. This means you might get a longer grace period before repayments start, or even structured payments that take into account your growing revenue stream. It's all about giving your startup some breathing room to flourish. But hold on, this isn't free money. You'll still be responsible for repaying the loan with interest. However, the government's backing makes it a much more attractive financing option, especially for startups with limited credit history or a risky but promising business idea. So, it's not a handout, but it is a powerful tool that can give your startup the financial boost it needs to take flight. In the US, the champion for startup financing through government-backed loans is the Small Business Administration, or SBA for short. The SBA offers a variety of loan programs specifically designed to meet the needs of startups at different stages. We'll dive deeper into these specific programs later in the video, but for now, just know that the SBA is a great starting point for US-based entrepreneurs seeking that government loan boost. Remember, other countries might have their own agencies or programs, so do some research specific to your location to see what resources are available. Alright, I know you're itching to learn the nitty-gritty about these SBA loans. Let's unpack a few of the most popular options for startups. SBA 7 loan, this is the big kahuna, offering loans up to $5 million. It's a versatile workhorse that can be used for pretty much anything your startup needs, from buying equipment and inventory to funding real estate or marketing campaigns. As for eligibility, the SBA looks for a strong business plan, a decent credit score, and proof that you've invested some of your own money into the venture. SBA microloan need a smaller cash injection to get going? This program offers loans typically under $50,000. Perfect for covering initial costs like materials or setting up your online store. The eligibility requirements are generally less stringent than the 7 loan, making it a good option for startups in the early stages. SBA 504 loan program, this one's all about fixed assets, like that dream building or a fleet of delivery vehicles. Loans here can reach up to $5 million, but it's a three-way partnership. The SBA covers 40%, a participating bank contributes 50%, and you, the entrepreneur, provide the remaining 10% as a down payment. This program is ideal for startups with a focus on long-term growth and job creation. Remember, these are just a few examples, and there might be other SBA programs suited for your specific business needs. We'll provide a link to all the SBA programs in the video description so you can explore further. But for now, this should give you a good idea of the variety of government-backed loans available to jumpstart your entrepreneurial journey. So, you've decided a government-backed loan sounds pretty sweet. But before you get too excited, let's talk about what lenders consider when reviewing your application. Even though these loans come with Uncle Sam's backing, there's still got to be some proof you're a responsible borrower with a solid business idea. Here's what typically gets weighed the most. Credit scores. This one's a no-brainer. Both your personal and business credit scores will be under scrutiny. A good credit history shows lenders you manage debt responsibly, making you a trustworthy borrower. Business plan muscle. This is your roadmap to success. Lenders want to see a well-crafted plan outlining your business concept, market analysis, financial projections, and how you plan to repay the loan. The stronger your plan, the more confident they'll be in your venture's potential. Industry and market buzz. Is your business idea riding a hot wave in a booming industry, or are you trying to sell buggy whips in the age of Teslas? Lenders want to see you understand the market you're entering and have a clear strategy to carve out your niche. Collateral comfort blanket. While not always required, some government loans might ask for collateral, an asset you pledge as security. This gives the lender some peace of mind that if things go south, they can recoup some of their losses. Remember, these are just some of the key factors lenders consider. It's always best to check the specific requirements of the program you're interested in. But by being prepared to address these areas, you'll increase your chances of getting that government loan green light and fueling your startup dream. Alright, you're pumped about government loans and ready to take the plunge. Let's break down the application process so you can hit the ground running. First stop, Information Central. Head over to your government's Small Business Administration website. In the US, that's the SBA's website, SBA website. This is your treasure trove of all things government-backed loans. You'll find detailed program information, eligibility requirements, and you guessed it, application forms. Now, about that application, get ready to gather some documents to showcase your business prowess. Typically, you'll need things like your business plan, financial statements, and personal and business tax returns. The specific requirements might vary depending on the program, so double-check the details on the SBA website or your local equivalent. As for the timeline, don't expect instant loan approval. The process can take anywhere from a few weeks to a few months, depending on the complexity of your application and the lender's workload. So plan accordingly and factor in this waiting period when mapping out your startup timeline. By being prepared with the right info and documents, you can navigate the application process smoothly and increase your chances of securing that government loan to fuel your entrepreneurial fire. We'll have a link to the SBA website and other helpful resources in the video description below. So stick around for more tips on government loans for startups, and don't forget to like and subscribe for more content to empower your entrepreneurial journey.